Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance, and on this episode, we're going to discuss conceptualizing the AI landscape. Bitcoin sell-off weighs on markets. We'll also take a look at annual gift exclusion and lifetime exemption for 2026, and we'll venture on over to the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are you, good sir?
Looking forward to the holidays. Looking forward to a little break. All the year-end stuff, looking at tax loss harvesting, getting required minimum distributions done, estimated payments that people should make before the end of the year to be able to deduct it for 2025. It's been a grind this December. It'll be nice to have a little break with the holidays coming up.
Yes, sir. Yes, sir. I am with you on that. Well, hey, let's dive right in. Conceptualizing the AI landscape. It's been a hot topic, and we're going to probably continue to touch on it into the new year and all throughout next year. But AI, of course, the ability for a computer system to perform tasks that are more human-like, such as reasoning, generalizing, learning, image recognition, and motion, so on. I know that I use it in quite a bit of the work that I do as a very useful tool. But there's so much conversation around it and how it's not only shifting the business landscape, but investment as well. So where do we want to jump in here?
Yeah, we just kind of wanted to give a broad overview. Carter, one of our newer employees, actually wrote this article, and I thought he did a great job because AI has really become a buzzword. Right. And I think it kind of gives a lot of people the impression that it's something relatively new. And I think he does a great job of putting it into context, going back to AI systems, really that the term was coined in 1956 at a conference held at Dartmouth College, right? When people were kind of dreaming up of what could be done once the technology caught up and once you had the ability and the computing power, the electricity, everything that we're talking about now. And then, you had IBM was really one of the first ones with Deep Blue and that kind of shocked the world, right? When Deep Blue Gary Kasparov in a game of chess in 1997, you had, one of their AI models win at Jeopardy, right? So, we've seen these things that have evolved over a long time period, and a lot of AI. It is part of the normal everyday world. I had an interesting conversation with a client who worked most of his career in the timber industry, and he was talking about this new AI stuff, and he's not sure. And I said, well, I've seen these programs on TV where you were using that at the end of your career. And he says, what do you mean? I said, I've seen these where the log is coming into the timber mill, and computer basically using artificial intelligence figures out exactly what's the best way to cut that log to get the right dimensions of board feet based on what the current market price is. And he says, oh yeah, you're right. And it does it in the blink of an eye, right? And those logs are going through really fast. And said early in my career, that was a guy named Bill with chalk, that kind of would look at it and, had some knowledge of what they were trying to produce, but obviously not able to do it as quickly or as efficiently or to change, right? It can change the parameters midway through the day based on how prices are changing in the market and what they're seeing. Yeah, we've used a lot of AI, even in the financial field. A lot of it's really interesting on payment processing. You think about how many payments are processed digitally and how quickly compared to what it used to take. And, areas like the credit card industry where they're able to scan transactions, one, process them much faster, but also identify what are potentially fraudulent transactions very quickly, which, brings down their losses, which makes, credit less expensive and more accessible to people by using artificial intelligence. So it's not something new. It's something that has evolved and has grown and really something that we live with every day. But obviously, the excitement is about really being able to push the boundaries now with the compute power. These big server farms on scale, and being in a position to be able to generate enough electricity to really power new and interesting uses.
Yeah, it's incredibly fascinating, and our perception of it as if this is, to your point, something new. Like you were saying, the if this then this, processing that happened. I remember when you speak of credit cards, and Carter very well put it in here. I remember those times of talking with my mom where it was the carbon paper look, thing back and forth for it. Like, how do you know if you went over your limit? Well, I've got to keep a ledger and I've got to keep, And so now we're in this place where I know for me, hey, scan that credit card, whatever. I go into the banking app or the credit card app, whatever it is, there it is in real time that, hey, this is under process and giving you a projection of what your balance is going to be and so on. So it's not that it's new, it's just becoming more advanced. And I think there's a lot of definite buzz and excitement. And as I said, I'm embracing some AI technologies to help enhance my work, become more efficient, double check my information, and really cut down the time, become more efficient. And so the efficiency's always been there from the start. It's just moving forward now, to your point, as we have quicker processing times and so on.
You bring up a great point, and there's so much talk about potential job losses, right? Because of these efficiencies. If you don't need someone to process all those credit card slips at the end of the day and submit them to get payment, that's one less job. If there's less people that have to work at the timber mill because they're able to process it so quickly, but of course all of those things create efficiencies, which drive down costs and really create more abundance.
Mm.
Now the job loss concern, I mean, it does make sense, but jobs that are creating inefficiencies so that we have less goods and services available are also not good for society.
Right.
It reminds me of a famous quote. I can't remember who the economist was, but he was touring China and they were digging a canal, and there was just thousands of people with shovels out there digging this big canal, and he talked to the government official that was giving him the tour, and he said, if you brought over some more advanced Western machinery, you'd be able to dig this much faster and much more efficiently. And the Chinese official said, yes, but but we need jobs, right? So we do it this way because we can employ a lot of people and it creates jobs. And the economist says, oh, well, if that's the case, why did you give them shovels? You should have given them spoons. Right? There's a point where it's like, okay, you don't want to purposely be inefficient, and obviously, at what level are you going to accept that inefficiency? But then, as with any new technology, it tends to bring other jobs, right, or other things. Scott here in the office and I were talking the other day, and we are talking about, just like with the internet, it created a lot of efficiencies. But, if you go back to the late 90s and try to explain to someone what a social media influencer job description is, they would think you were absolutely nuts, right? I mean, that would make no sense because obviously it hadn't been invented, things hadn't evolved, but, those new jobs, new opportunities, new things tend to evolve out of these technologies, and typically, lead to, if anything, more employment opportunity, but with more efficiency. So we just have more people get more of what they demand.
Yeah, and I think the exciting part of it is being that, I view it as a tool and one that I continue to educate myself on what greater possibilities come out of that. Because if you had told me, as someone that, I worked in broadcast radio for darn near 21 years of my life, that, hey, you would be doing these different things in 10 years, I would have laughed at you like, well, no, who's gonna stream music through their phone and into their car? And no, we've got this great thing that's been around forever. Here it is. You just tune, there you go. And it's like, no, it's the next step of evolving things, and I think there's a lot of excitement around it because it doesn't. It operates off of a different set of rules than traditional computing did for us in the past. Really, that bypassing, and I think Carter puts it here in the article. The process was if this, then this, and now it's just kind of if then. It's moving it forward, so it's almost I can have a dialogue going with my thoughts and ideas that something else challenges me. It's almost like the other voice in the room, so to speak.
Yeah, yeah, and I mean, at this point, no one could probably even anticipate some of the ways in which these tools will be used, right?
Yeah.
And the opportunities it can create. From an investment standpoint, it's not so much about what may happen, but it's a lot of it comes down to when, right? That's the challenging part. It's because the foundation of finance is the time value of money.
Yeah.
If someone, promised me $1 of cash flow tomorrow, I would probably pay 99 cents or even $1 for that cash flow, right? That's what it would be worth. But if that dollar of cash flow isn't going to come until 10 years from now, then that's probably only worth 30 cents to me, or something along those lines. So, when you think about it that way, it's how quickly, will this, will we see the financial returns? And I think AI is very interesting, just like, the internet was a very interesting technology. Of course, it got vastly, the internet internet stocks got vastly overpriced. Not because it didn't live up to its promise, but because people expected those returns and those cash flows to come much sooner than they actually did. And so that'll be the real challenge for AI, and its ability to justify the current valuations is not necessarily the opportunities that are there. I think we will find opportunities to use for this tool that will be valuable. The question is how quickly.
Right. Right. Good point. Anything else you want to touch on here before we jump on over to Bitcoin sell-off?
Well, kind of what we touched on is separating the technology, the innovation from the markets, right? I mean, I brought up the referencing the internet. I think that's also definitely true with AI. You often have these new innovations that will continue on and will end up making changes, hopefully more positive than negative changes in society. But that doesn't necessarily mean a specific company or specific investment or a specific value that's assigned to that investment is justified, based on that opportunity and how lucrative it may be, how much competition there will be, or when those cash flows will come.
Yes, sir. All right. Bitcoin sell-off weighs on markets. The U.S. stock market last achieved a new all-time high in late October, and we had touched on that. But since then, stock prices have declined, giving back about 5.5% of the gains from earlier in the year. But the interesting part is over the past few weeks, most of the focus, like we touched on, was the poor performance of AI stocks and companies that supply them. However, one area that people may be missing, and I personally hadn't seen it in any sort of headlines until I got the personal financial review around this, because I was invested in crypto for a while and sold off a while back. Nice gain, I will say that. But however, we're seeing a shift around, and there's been a big sell-off in Bitcoin and other crypto investments for that matter.
Yeah. So we did see a bit of a pullback in the stock market. It's mostly rebounded from when this was written. And to an extent, we've seen a bit of a rebound in Bitcoin as well. But when this was written, the price of one Bitcoin had peaked at a little over 126,000 in early October, and declined to roughly 84,000. So in essence, a 33% decline in the span of about a month, or 1.5 months, pretty short time period. Um, Now, as we know, I mean, Bitcoin has been very volatile, right? There's still a lot of questions about its use. I often refer to it as a solution in search of a problem. I think the technology is very interesting. I'm just not sure what problem it solves that justifies such a high value. And I think because of that, a lot of the value is driven by psychology, investor psychology, and that can change very quickly. And so you can see dramatic swings in prices, both to the upside, which gets people's attention, but also to the downside, as we've seen recently, when that psychology shifts.
Yeah, how, I mean, I know how, it was interesting. So, hey, I'll put a little bit of money into it, played with it for about 4 or 5 years. And got, like I said, I got a return. I monitored it, got out, but I've not really looked into how, businesses are utilizing it, because that was the intriguing part, was like, okay, you can use this thing for goods and services, but it seemed to me that especially with Bitcoin, it was like, well, this is gold. I'm not going to go out and buy things with gold. I'm going to use my cash flow. There, it just, that, like you said, in search of a problem, it just never made sense to me. Go, oh yeah, I'll use a little bit of this to go buy groceries or whatever it is. It never made sense to me in that way. But how is it around, companies investing in it and so on?
Yeah, and that's a big part of the problem in terms of just kind of day-to-day transactions. The methodology behind Bitcoin, which makes it interesting and makes it a secure network, requires a lot of compute, right? And compute is expensive, especially in terms of the electricity that it uses, and the electricity needed to cool the data centers where those processes are taking place. And so for a day-to-day transaction, right, the costs are actually quite high if you look at what it would take to process transactions like the credit card system does. So it hasn't really it hasn't we'll see headlines, of this company adopting this Bitcoin strategy or something, but I mean, we haven't seen it really move into our day-to-day life. Which is interesting because, in terms of seeing Bitcoin decline at the same time that the market was pulling back, there's not a lot of direct links between the cryptocurrency investment space and the U.S. stock market,
Mm.
right? I mean, you kind of have two ways that maybe indirectly or to some extent that we could be seeing the sell-off in Bitcoin weigh on stocks to some degree. I mean, one is, there's some publicly traded companies that either own some Bitcoin, right? There's been some companies that have used that for their treasury, or maybe they work in the cryptocurrency space, right? But those are pretty small, very few and far between, and not real big companies. I think really what we're seeing is, risky investors, like other investors often diversify their holdings, but usually into a variety of risky assets. And, with the volatility we've seen in Bitcoin, you could definitely put that in that category. Some of the AI startups that we've seen, right, are definitely risky investments. And so I think with Bitcoin declining, that could be part of what's putting selling pressure into these riskier areas of the stock market, as people kind of rebalance or, rethink their portfolio. But I think the positive that we're seeing is, if we could see Bitcoin drop by 33% and only see the stock market drop by 5%, what that tells me is the stock market is at least, somewhat reasonably insulated from the big amount of volatility that we've seen in some of these cryptocurrencies.
Yeah, yeah. Well, definitely something to keep an eye on for sure. All right, let's jump on over to annual gift exclusion and lifetime exemption for 2026. The IRS annual gift exclusion. Where's it at for the 2026 calendar?
Yeah, so we're coming up to the end of the year. Some people this is the time period when they choose to do gifting to kids, grandkids. Some in some cases as a part of estate planning strategies into different trusts. So we always like to follow up, towards the end of the year and remind everyone that for 2025, and actually it will be the same for 2026. The amount that any person can gift to another person without having to file a gift tax return or really do anything will be $19,000. So if you have spouses, they can do what's called gift splitting. So they can each give 19,000 to an individual. And again, it doesn't need to be reported. Kind of what the IRS would call the de minimis amount. So they don't need to file a gift tax return. The person giving the gift doesn't get a tax deduction for it, and the person receiving it is not taxed on that. So it's in essence, a tax-free exchange. Now then, how this works into estate planning is that each person in 2026 will have a $15 million gift and estate tax exemption equivalent. So basically, that's the amount that that's the amount above and beyond those $19,000 gifts that just kind of aren't counted, right, or considered too small to deal with, that they can either give during their lifetime or leave to their heirs at death.
Mm.
So if you go over the 19,000, you have to file a gift tax return. And the amount over 19,000 will be subtracted from your $15 million lifetime amount. And that's how you keep track of it, right? Each year, if you make a gift over 19,000, you file a return and you subtract from that lifetime amount that you can pass on. Now, obviously, a lot of people, 15 million will be plenty. If you have a married couple, that's 30 million. So not many people are going to go over that level, but it's still worth planning in some cases, because you never know, and you never know if the law may change. So for that reason, some people still employ gifting strategies, and there's a number of different ways to approach it. We talked about gift splitting. You can spread the gifts over multiple years. In some cases, paying institutions directly, such as for education or medical expenses, doesn't count as a gift. So it's important that if people are considering gifts, especially if they're sizable gifts, they should probably talk it over with their financial planner just to make sure they're doing it most efficiently and not running it afoul of any of the gift or estate tax rules.
Yeah. And I think it's one thing that you point out that's important to keep in mind too when meeting with your tax planner is that completed gifts are always irrevocable. So for this reason, again, always encourage reviewing all of your options and consulting a tax professional when considering a gift. Let's jump on over to the Plan Solutions Incorporated office bulletin board. Got 3 things pinned up there this week. What are they?
Yeah, so one of them was kind of a fun thing we did. Carter set up. We took a field trip to the ACC Senior Center, which is a local senior care center, where they host a bingo for their residents plus people from the community, and they often ask for volunteers to come help and also to bring food, refreshments, and small bingo prizes, right? So it makes it a little more interesting for the people that win. And actually, we had a great time. We got there, we helped set up, we set up the food and everything. I learned apparently, Shannon missed his calling. He should be a bingo caller. He had a lot of the senior citizens just cracking up and having a great time and going back and forth. So it was a lot of fun. It felt good, give back to the community, and yeah, it was just a real kind of positive team building exercise.
I hope he used the B12 joke. B12, my favorite vitamin, I might add. We also want to speak around holiday seasons are quickly approaching. So Christmas, New Year's Eve, New Year's Day. What are some of the things people should know about the holiday schedule at Plan Solutions?
Yeah. So, with the holidays falling kind of in the middle of the week, it's a little bit difficult, and people wanting to be able to travel and obviously just spend time with family and loved ones. So we tried to organize it where we'd have some flexibility there. So we want clients to know Plan Solutions. We will be closed on December 24th, 25th, and 26th. Basically, creating a long weekend that if people are traveling, they're not stress trying to get back or maybe avoiding some of the crowds. And then for New Year's, we'll be closed on January 1st, of course, right? New Year's Day. But otherwise we'll be open, that week and Monday, Tuesday, and even part on Wednesday. If there's any last minute things, although hopefully there's not many last minute things, because like every year, with the holidays, with sometimes companies that we contract with can become inundated. Sometimes it's just hard to get some paperwork process or requests processed at the end of the year. So if anyone has anything that they're anticipating, we need to know about it as soon as possible, because if we get into that last week and a half of the year here, we'll give it our best effort, but we can't guarantee that something will be completed in time if it has to be done by the end of the year.
Yes, sir. Absolutely. Anything else you want to add while we wrap up this edition of the Plan Solutions Incorporated podcast?
I just hope everyone has happy, safe holidays.
Yes, sir. Well, thank you for listening. Please hit that subscribe button on whatever platform you're on, Apple Podcasts, Spotify. And don't forget, we do have a YouTube channel where you can follow along to a visual form of the Personal Financial Review, the content that we discuss here on the podcast. And that's youtube.com/@plansolutions. And of course, if you have yet to subscribe to the Personal Financial Review, it's simple to do. Send Katie an email, katie@plansolutions.com, and get subscribed today.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.